All right, folks, welcome back to another episode of me documenting my day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today, took another small loss, similar to yesterday. Got the right read on price, just a small mistake. And I think the mistake, or what's holding me back the most, is I'm just simply not taking enough winning trades. And I think what it's going to require to fix that is a lot of back testing and a lot of data collection. So recently in my journey, I've been studying a video that I found on YouTube from Umar Ashraf, where he just breaks down the 5 stages of a trader's development. And I think right now I'm in stage number 2, where I'm still developing, even though I've been at this for 2 years, because I haven't actually defined playbooks and setups that I look for when I come to the market. So with that being said, let's get right into the breakdown. So if we look at the statistics, I think I should get myself out of the way here. Maybe move me like right there. We'll just look at the calendar real quick, all right? Let's look at the stats. It's almost at the end of the June, and right now I'm having right around a break-even month. I'm only up 2.35 R, which I'm only focused on my reward to risk ratio. Like how much am I making relative to how much I'm risking? That's just what I've been told from traders with experience in the market for over 10, 12 years who have made multiple 8 figures. They say do not focus on the dollar amount. You need to focus on your process, because the dollar amount should have something repeatable behind it, and that is the goal that I'm working towards. Like, I'm not worried about the money at all. I'm focused on the R multiple. Right now I'm only up 2.35 R, and my win rate is 30%. My profit factor 1.87. My day win 33.33%. So if we look at the report over here, I think it's clear that I'm just simply not taking enough winning trades. Now, I've got 3 winning trades on the month. I haven't really been trading much at all this month. Just a lot of things that have been coming up. But I'm just working on trade selection, mainly because I don't know exactly what it is that I'm looking for still, almost a year into my ICT study. So I've got to define what my playbooks are, and that's something that I just work on. But another thing that I really took intentionally, like when I'm starting this month, in the month of June, is data collection. I'm starting to take data collection really seriously, because your statistics are going to show you what you need to work on. And that's something that I haven't been doing at all. Keeping track of my numbers in Notion, I don't have any way of actually like visually displaying my statistics, kind of like how it is up here. So I made a little investment in myself. I paid $300 for this software, and I put in my data, and I'm tracking everything now. So I'm still doing my day-to-day process. Everything's just integrated into this one application now. So it's pretty clean. So let's take a look at it. The pre-market game plan. Let me break this down. So hopefully y'all can read these annotations, but let's see if we can make it a full screen. That's probably a little clearer. Okay. So since we have 2 consecutive up days, that I'm wondering is, can we have a third large up close day, or is price going to stay inside a small range today in base as it does after large range days? I'm just going to go ahead and pop the chart real quick. Here we go. So on the daily, I'm kind of noting this as a Monday low of week, because Monday opens below relative equal lows, and Friday daily low, boom, closes near its high. Tuesday does the same thing, right? Boom, closes near its high. So now we have 2 consecutive back-to-back days where we had a large up close candle. So on this candle, I'm wondering, is it going to continue and have a third large up day in a row, or is it going to be a smaller range day because the market has ran up so far in such a short amount of time? Today, I was leaning towards more looking for something like this, where we just have a small little candle where the market just bases out. It doesn't really go anywhere, doesn't really do anything. So on the 4 hour, it's not the 4 hour, you can see how that candle developed, right? You can see how we had this large up candle and then also a large down candle overlapping that. So this is the equivalent to the formation of this. So the market really didn't go anywhere at all today, and I wasn't really expecting it to do that because we've ran up so far in such a short amount of time. So on the hourly time frame, I'm noting the smooth sell side liquidity below the marketplace and how far the market has gone with no retracement whatsoever. It's just boom, moonshot, right? And when the market is opening so high already on the day, this is the 9 o'clock candle, it's literally opening near its high, basically on the high day, and we have all these smooth lows below, and I'm anticipating this candle not to be another large range day, but instead be a small range day. I'm not expecting continuation in this move. So on the 4 hour, going back up initially, I saw the reaction out of this gap right here, where the candle dropped into it, closed above it, and then we have this candle was painting, right? It wasn't closed yet. 6 o'clock candle that closes at 10 o'clock, but it looked bullish in the moment. So I'm seeing this information thinking this is pretty bullish, but at the same time, this thing's gone too far. I'm not looking to be a buyer. And I didn't really submit to the idea of looking to be a seller until I got to the 15-minute time frame, and I was like, dude, look where the market's opening at. Right here. Here's the high of day. Here's what we've done over the past 2 days. No retracement whatsoever. There's a lot of smooth lows below that the market could likely draw to. We have a huge premium gap opening where it can at least draw to 50% of that gap with a 70% likelihood. I'm not looking to be a buyer at all. So eventually I get down to the 15-minute, boom, submit to that bias. But what made it hard to submit to that bias intraday was the conditions in which the market delivered today. What I wanted to see on this 945 candle was this candle close near its low and overlap this candle completely, and then the following candle, this candle, trade up into that up candle and then do something like this. But it dropped lower aggressively, completely overlapped this and closed here, leaving this large lower wick. So at that point in time, I was a bit confused on my bias. I was like, is this thing still strong? Does it still want to go higher? There was a bullish SMT with the S&P, leaving this large lower wick. I was kind of confused. So I have a bit of mixed information. Ideally, it would have closed near its low for an easy sell on the following 10 o'clock candle to just trade up into it and make a move like this. But that happens later on in the session. Now I discovered why this candle closed here and the following opens, trades down, and closed near its low. It's because within this range, the market dropped, right, and overlapped this range. But then inside that same 15-minute interval from 9:45 to 10 o'clock, the market began to rebalance that range. It began to rebalance to a premium. It rebalances to a premium right at 10 o'clock, right at the close of the candle, which allows the 10 o'clock candle to open and immediately run lower like that. So if we look inside of that 15-minute range on the 1-minute time frame, you can see how this candle, it traded much lower, but ended up closing still kind of high, right? Leaving that large lower discount wick, because within that 15-minute range, here's 9:45, and then here is 10 o'clock. It dropped, but then began to rebalance that range, creating that lower wick, which kind of made me like, is the market bullish? Is the market bearish? I can't really tell at this moment, so I had to sit still and wait for more information. Now, once I got that large down close candle on the 10:15 candle, then I was like, yep, at this point in time, I'm looking to be a seller, and I documented that in the intraday journal. I don't want to look at it there. Let's look at it here. Let's do this right here. There we go. So I can see that, and I noted after the market closed that I switched my bias between bullish, bearish, bullish, bearish. I switched up 4 times because of how the market was just fluctuating up and down, and I wasn't submitted to the idea of being a seller, so my bias was easily swayed. Another lesson that I learned. But finally at 10:15, I say, if price were to go higher after the sudden drop lower, it wouldn't have closed low on the 15-minute or 5-minute. It should have rocketed back inside the range. Now I'd say move higher as trading into the 9:30 up candle, which should act as premium array and send it lower towards Asia sell side. Today is not going to be another large up day. It's going to be a small lack of direction kind of day. So I'm saying this at 10:15. Once I get this confirmation right here, yep, the market's definitely going lower. Look at the 5-minute. 5-minute tells the same story, right? So at this point, I want to see any retracement back into the 9:30 up candle on the 15-minute time frame, act as a bearish order block, and reject price. Now, my issue selling short was I sold short way down here right after the market traded down into this gap and then began to move away from it. So let me put the executions on the chart. So there's my sell right there, right? Now, why did I sell short here? Because this candle opened. As I was writing down, I want to see any move back into the 9:30 open / up candle, reject price, and close lower. This is what happened. This candle opened, wicked right to the 9:30 open price, to the tick, literally to the tick, and began to move off of that. So when I see this candle close lower, I'm selling short on the next candle. I sold short right there. Now the issue with this trade is the location. Number one, it's deep in a discount, right? The market just cleared these relative equal lows. It also traded down into this hourly BISI. Number two, the conditions for this kind of setup were not ideal. I mean, look how high resistance the market is, right? We're moving, but we're moving with deep retracements. So I've noted that when the market is high resistance like this, you have to be very, very late with your entries and expect deep retracements and be very forgiving with your stop loss, meaning you have to get the trade more room to work because it's likely to have deep retracements like this. So the day and condition and location of this trade is what made it a losing trade. Now, if this was a low resistance liquidity run kind of day where the market was just moving very, very fast, like boom, 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 then it would have tapped the 930 open price and kept it running lower. I thought that was what's going to happen, but because of the day/condition, the day being we've had 2 consecutive larger up close days in a row, and I'm anticipating this day to be a smaller range day, and the condition being high resistance, I can expect something like this before it delivers what I'm looking for. So I sold short here with the stop above that high, targeting 50% of the opening range gap, and that didn't deliver because of the day and condition and location. That's the mistake I made on this trade. On an ideal trading day with a very fluid, fast-moving market, this would have been a good trade. It would have went boom, boom, and dropped lower, just like that. But this trade shouldn't have been a loss. It should have been a break-even trade, but I led myself further down the road of hope instead of just taking the trade off, admitting that I was wrong, and moving on. Because this candle, at one point, it was a large down close candle. Bold-faced down close candle below that low. At this point, I'm thinking, when this is a bold-faced down close candle, it has to close over this low. It has to move below that low with speed to confirm or move down into at least 50% of the gap. If it doesn't do that and it closes back inside the range, that's not what I want to see. That's going to tell me that this trade idea is dead. And it did that, and I see that, but I'm still holding on to the trade. Like, that information does not tell me that it's going to move lower from here. It tells me it's going to do something like this. Now from there, I could have taken the trade off for break even and moved the stop to break even. But I just continued to allow myself to hope that eventually the market was going to break lower. I even had another chance to take this trade off when we formed this gap right here. And this down candle traded through it. At one point, this was a bold-faced down close candle as it was painting, but at the close, still inside that gap. So what does that tell me the market's going to do? It's probably going to take out these relative equal highs. So the market came just shy of my stop right there, didn't take it right there. And I'm thinking, is this actually really going to play out after I left it on and allowed myself to just hope that it would? No, it didn't. Why? Because this down close candle still closed inside of the gap. And then boom, takes the stop, has a deep retracement, and then it plays out. And you know that this is not the real move because the move up rebalancing the range is extremely, extremely high resistance. If you compare the difference between how high resistance the move up is versus how low resistance the move down is, that tells you what the real move is. So it's not a bad trade idea. I had the draw and liquidity correct. The analysis was correct. It was just simply the location of the sell and the timing of the move because of the condition/day. So, not a terrible day. I literally lost only 9 points on this trade, which is why we go to TradeZella, which is why I've been able to take so many losing trades but still be profitable this month, simply because I'm not being reckless. I'm managing my risk very, very well. Like, I'm only losing about 1 hour per trade, which is good, which means if I have a stop loss set in the market, I'm getting taken out at that stop loss. I'm not moving it. I'm not, adjusting my risk because I don't want to get stopped out or I'm fearing being wrong or anything like that. I'm just accepting that I got it wrong there and I'm taking risk off. Now here, like, I could have took this trade off for break even and not even lost 9 points at all, which is kind of what I did on Monday. On Monday, the first short that I took, I knew it was not good. Like, I knew the trade was dead. So I took it off and I lost only $35, right? All this information told me the trade was dead. So boom, I cut it. The same thing could have been said about today. If I go to today, this information right here did not tell me this trade was going to play out. So boom, I should have cut it right then and there. So that's a little breakdown for today. I think what's holding me back the most is that I still have not developed like a playbook, setups, a model. It's like I have a very good understanding of what the market is likely to draw to. I don't have a model. Like, I don't have the setups that I'm looking for. Still haven't defined that. Still haven't spent time back testing that and building data around that, getting comfortable with it. And number two, I also struggle like submitting to one idea on price, looking at a level in price and being like, that is my objective for this session. I want to look to take a trade to aim for that level. So those are some of the things that I'm lacking. Although I know that I'm lacking them, now it's up to me to take action on that and work towards solving that problem. But I do know that, I mean, I'm just continuously getting better each and every single day. If you watch my videos from 8 months ago, you're going to look at my charts and be like, dude, what the shit are you even looking at? If you look at my charts today, you can see, oh, wow, that's very clean. I know exactly what he was thinking. I know what he was looking for. And it's just like over time, you simplify things and you get rid of what you don't need and you just keep what you need. You filter a lot of things out. You filter a lot of the bullshit out and know that you don't need it at all to be profitable. Like right now, I'm at a point where I completely stopped watching ICT lectures because I know that more education at this stage in my journey is not the answer. The answer is discovering myself, right? Understanding what holds me back, understanding my problems and how I can solve them, actually implementing a plan to solve them. And which my number one problems right now would probably be I don't have playbooks, I don't have setups, and submitting to draw on liquidity. And that's about it. So that's a quick review for this session. I hope you enjoyed it. Thanks for tuning in and see you next time.